Imagine running a massive telecom network across Pakistan. Your biggest unpredictable cost, it isn't server tech or labor.
Right, it's actually tied to something entirely global.
Yeah, exactly. It's the price of a barrel of crude oil extracted thousands of miles away. Welcome to the deep dive. Today, July 23, 2026, we are looking into the sudden, sharp drop in the KSE 100 index.
And, we're really exploring how climbing global oil prices are just dragging down major local sectors.
Okay, let's unpack this. Karachi's main index took a massive hit today, plummeting 2,690.48 points.
Which is, a 1.54% drop in just one session.
Exactly. It closed at 171,739.44. And the wild part is that it was trading at a high of over 175,000 earlier today, before the floor caved in.
Yeah, it was a brutal reversal.
Yeah.
But that kind of plunge doesn't just happen randomly. If we look at the source charts, the primary catalyst wasn't local. It was actually WTI crude oil.
Oh, the global energy boards.
Exactly.
Yeah.
We saw this aggressive, relentless upward surge in the U.S. oil benchmark, and it basically hijacked local market sentiment.
Wow. So to understand this local nosedive, we really have to look at those global energy charts. Is WTI crude oil basically acting like a heavy anchor tied to a hot air balloon for the KSE 100?
That is a perfect analogy. If we connect this to the bigger picture, you can see on the WTI crude chart how it just rallied so sharply from its June lows.
Right, it wasn't some slow, gradual climb.
No, not at all. It aggressively pushed past the $90 mark and is now trading around 90.45. So when global energy costs spike that fast, it applies heavy macroeconomic pressure locally.
And that's what directly correlates with the KSE 100's sharp daily decline.
Yes, exactly. It even pushed its year-to-date change completely into negative territory. It's sitting at minus 1.33% now.
Ouch! A single day practically wiping out the year's progress. And we can actually see the real-time damage of this anchor effect when we look at specific sectors on the chart.
Oh, absolutely. The petroleum sector obviously took a huge hit today.
Right, like Pakistan State Oil, PSO. It broke way below its support channels, dropping down to 337.54.
Yeah, which makes total logical sense when crude surges like that.
It does. But here's my question. I get why a petroleum stock like PSO is volatile, but why is a telecom stock like Pakistan Telecommunication Co., PTC, also taking a hit? They dropped 1.19% to 69.02.
What's fascinating here is that it's actually not just general panic. It's raw operational math. Think about what a telecom company needs to run its infrastructure.
Massive amounts of power, right? Like uninterrupted power grids.
Exactly. When oil crosses $90, it inflates energy tariffs. It drives up diesel costs for backup generators across the entire economy. So the charts perfectly reflect this systemic bleed.
Oh, wow. That makes so much sense. It's not just oil and telecom either. Looking across the board, almost everything is flashing red.
Yeah, it's widespread. K Electric is down 0.98%.
TPL Corp fell 1.50%.
Yep, and Interloop dropped 1.04%. Every sector is instantly pricing in this much higher cost of doing business.
Though digging into the data, there's one weird anomaly. Like Gontara Tire somehow managed to pull off a 1.29% gain today.
Yeah, which is wild. But they are definitely the rare anomaly in a very gloomy room.
For sure. So what does this all mean for you listening at home? Basically, WTI crude's rise is creating this massive ripple effect. It's suppressing the KSE 100 and dragging down major petroleum and telecom players.
It's an inescapable ripple effect. But I do want to leave you with one final thought. We've talked a lot about today's bloodbath and the negative YTD stats.
Right. It looks pretty grim on paper.
But the KSE 100 is actually still up an impressive 23.33% over the past year.
Wait, really? Even after all of this today?
Yes. So the real question you have to ask yourself is this. Is this crude-driven plunge just a temporary panic? Or is it the cracking point of a much larger market correction?